Hello, hello everyone. Welcome back to our channel.
Hope you have a wonderful day. We nearly hit our, well actually we did hit our record.
For investment. Okay, today is update.
Yep. So update on what's been happening with our portfolio as a whole.
For ETFs and micro investments.
So
small managed funds.
Yeah, so when we first started this journey, we only put about $5 or $10 a day.
Literally, almost 2 years ago.
2 years ago. So as of right now, at the time that this is being recorded, we hit about $99,000.
2 weeks ago, we hit 100,000.
Yes.
It did.
It hit 100 and then just go.
Yeah, yes,
like, ooh, that hurt.
Yeah.
So we're breaking it down, I guess, to a whole entire different platform to diversify and to minimize risk. Some of the platform do cross over between a certain product, let's say. Yeah, that's our plan anyway. We've been trying it out. After a certain number of weeks when we were, I guess, looking at the potential income from this, it would be massive.
Yeah, if it's everything going up, but
correct.
But lately it's been everything going down. Well, but because we are not using the money for our living or expenses anyway, we treat it like our retirement plan.
That's it. So, well, as a whole, we hit about 100,000 in 2 years.
Yeah.
Yeah. So effectively, I can actually buy my car.
No, you can't. I said 300, sorry.
Okay, gotcha. So I need another 200 to go.
Yes.
Righty, so this is a breakdown of it. So the first one, we open up a Vanguard account. Vanguard is a little bit tricky. It doesn't actually give you a lot of, I guess, charts. If it goes up or down.
Yeah.
But as a whole, we've got
21,000 and where is it? 478. So our investments, it was 21,000. So our profit is 478 in I think a few months.
Yeah.
So in that portfolio, we split it into three. We invested in the three. How we found them or how we like to find them to invest is just return based on 10 years. Was it 10 years?
5 to 10 years, at least 10 years, like on an average. I don't do yearly 2 years or 3 years. I look at what is the maximum
the track
average
record they have. So I think we invested them is because each year they're more than 10 years average.
More than 10 years, yeah.
So we do in international shares index fund. Okay.
It'd be best if you just tell them what the code anyway.
Yeah. Okay. It's
VAN
0003 AU. Anyway, we put 8,000 and now it's 8,255.
Yep.
Next one we did the VAN 0021 AU is the Vanguard International Small Companies Index Fund. So they have index fund and ETF. We chose index fund.
Yep.
I think because was the managed fund
just
is
slightly lower.
I see them they're the same.
Yeah.
And the value for that is 8,171. We put 8,000 as well. And then the latest in the family is the VAN 0004 AU, Vanguard Australian Property Securities Index Fund. I think we put 5,000 and we got $50 return. I think just last month.
Yeah. So instead of buying a property, we look at it. Oh well, this one's got a property securities index fund. So
we check into what did they invest. Is all these companies they invest in properties?
Yeah.
They do properties.
So if you read on, I guess if you're thinking of opening a Vanguard, those are the three area that we invested on.
Yeah. But everyone's strategy is different. For our strategy is more capital gain.
Correct.
And in the future, if there's sufficient fund, we just do slowly taking out our interest or return.
That's it. So slowly, hopefully. I don't know if that ever happened. The next one would be, let's say, the CommSec Pocket. CommSec Pocket is second youngest in our family. And what I don't like about that, as I mentioned before, is that you gotta have a big amount of lump sum. You don't do daily contribution.
Similar to Vanguard. Oh, I think Vanguard, they have new function. You can do daily now.
Oh, you can? Oh, I didn't know that.
I'll check into it. I got an email.
Get back to you.
Yeah.
And based on this is, because with CommSec Pocket, they take money when you put it in, and they take money when you're taking it out. That's the one thing that I don't like about it. Whereas Vanguard is like a fixed amount of fees. Is that right? Like a percentage. Yeah,
yes.
percentage. Whereas this one is like a flat fee of this amount in, this amount out.
Brokerage. Yeah.
So as a whole, what is it? 14,500 is the total amount. Anyway, there you go. 22% gone up so far as a whole since we started this.
When did we start last year?
Last contribution was in February 2021. 22% return. So, which is about 2,600 apparently is the return based on my portfolio.
Really
now
good.
They have 7 different portfolio on this one: sustainability, emerging market, global 100, top 100, health-wise, tech savvy, and Aussie dividends.
We bought them all, okay?
Because I didn't know which one to buy, like which options to purchase. I realized, I'm just gonna put one each.
That's really good. Did it all go green?
All of them is in the green right now, but this is based on my portfolio. The best one,
but because we've invested more than a year, so when you invest, it's long term.
Yep.
Ideally, anyway. 5 to 10 years minimum.
Correct. So the best one so far, well, based on my portfolio alone, I'll give it to you anyway. The whole entire lot. Sustainability leaders is 21%. Emerging market 8%, global 100 is 29%, Aussie 100, Aussie top 200 is 19%, health wise 16%, tax savvy is 29%, and Aussie dividends at 16%.
Wow, really good return on all of them.
Yeah, our aim on all of this, I guess, investment or ETF or managed fund is to aim to get 10% or more. So if you can get 10% return, that would mean you're winning in whatever way. Anything beyond that is cream. Yeah, it's a bonus, let's say. That's on Concept Pocket.
Next, Space.
Next one. Okay, cool.
I'll go Spaceship because now.
Oh yeah, I closed up my account.
You closed the Spaceship, but we used the money to put in Vanguard. That's why Vanguard we got 21k. Yeah.
The only reason I closed it is because they started to introducing monthly fees. It doesn't matter on how much is your account. So I figured, well, my account is only just a small amount of money. So I figured I might as well close this. Yes, the fees, the returns still cover with the fees, but I realized that I might as well close it. Okay. Anyway, go on.
So in Spaceship, we invested in all 3 as well. So the first one we did was Universe. I look at the chart. We started quite early. It was in last year, February, in my account. Current balance 31,900. It went up to 33,000 a few days ago.
Should record this
anyway. Well, you look at that. So at the peak, I was 33,390. Anyway, I can't hold it. But peak. So far it's so good. The return is 6,000. I don't know if you can see it. 6,600. So very sorry. And then we have Earth and Origin.
Yeah.
Earth. Interesting because Earth been doing so well, but lately I think it's going down. This is our stair steps because our plan is $50 a week for Earth and Origin. Since July this year, we invested. Now we have 968, and in Origin, we did the same. July 21 as well. We have 987 in Origin.
So as you can tell, this particular account, anyway, the stair stepping is a weekly basis
investment. So both of them we put. Okay, both Earth and Universe, we put $50 a week, automated. And Universe, Earth Origin 50, Universe 70 a week.
Yep.
We used to put more, I think 1,000 a week in Universe. That's why we have a pretty heavy account in there.
The last one would be, I'd say, Raiz. Raiz, well, it didn't perform as well as Spaceship. As a whole, capital-wise, we put the same amount as Spaceship. Origin, is that right? Origin?
No, Universe.
Universe, sorry. Okay, so as a whole, at the moment, it's 29,800, let's say. This is going to be blurry. There you go.
Okay, not that close.
Not too close. Okay. So 29.8, but in the past year from our account, it becomes 19% return. Does it tell you?
18 yearly space.
Space is 18.
Yeah.
So your one's 18%, my one's 19%. Like I said, every single account that we aim for is 10% or higher.
Yeah.
So that's how we look at a typical product. Instead of, I guess, trying to search any other things, we look at it. 4% of that, 4% of your money goes to inflation, so it'll disappear without you knowing.
Yeah.
We're looking at possibly in the future taking out about 4% as our retirement account.
Yeah.
So we're
and
going
then
to eat
2% to save extra, to let it roll, right?
That's the plan that we're using. Now, how do we get all this capital is actually based on our investment on property as well as eBay. Funnily enough.
Yeah.
Yeah, that's mostly how we get it, and then a couple of contract jobs here and there.
But that's more like our living expenses.
Yeah.
I don't know, if we have extra, we put it in.
Yeah, so the I guess for us is the way we see it.
Yeah.
When we have a big lump sum,
we put in investment first.
Correct.
The priority. Investment, and then what do we do? Normally we don't have any more left. We either go holiday, that's it. But we just go local anyway. How much can you spend? Like 1,000, you'll be lucky at 1,000.
For us, it'll be very low because we always go like very local, short term.
Yeah, a few days only, unless we're going international.
We're not doing lavish type of holiday. Our typical holiday is about camping. So anyway, that's just out of the
update for our investment.
Hopefully this gives you guys an understanding how we go about, I guess, achieving, I guess, that $1 million figure.
Is that $1 million figure?
Maybe.
It's not mine. It wasn't.
Was it 400,000? Well, at least I'm going to get 300.
I'm happy with 500.
500. Okay, then start. I got to get 300 at least.
Yeah.
In order for me to get my ultimate
dream
car dream, I'm going to have 300,000. As soon as I hit that, then definitely give you guys an update.
And you got to save up for your cash to buy that car. Okay.
So, yeah, that's just our update. Don't forget to subscribe, comment.
See you next time.
Bye.
Bye-bye.